has survived the worst. Two experts wait by, one, the economist from BNP Paribas, Paul Mortimer Lee, and the other, an ace trader, Bhanu Baweja, Head of Research and Emerging Markets at UBS. Both join us from London. Gentlemen, thank you very much. Let me start with you, Bhanu. The EU IMF package was a robust one. Would you say at least the crisis nature of Eurozone markets is well and truly over? That you may see dips, but you will not see crises?
No, I don't think we can say that with any sense of conviction. You're absolutely right. The package was a very, very big one. It's also, I think, fair to say that history teaches us that quantitative easing shouldn't be trifled with. When the Fed did that, when the Bank of England did that, they really well and truly caused a bottom under the markets, and they created that big contraction in volatility and a big increase in risk appetite. However, we must keep in mind that robust as this package is, it's one that is born out of compulsion rather than one out of conviction. Most of these packages are obviously born at a time of market stress. But unlike the US, there isn't one voice in the Eurozone. There are plenty of them, which means that the communication risk premium is going to stay extremely high in the Eurozone. That's point one. The point two is that what you can expect from peripheral Europe is for them to say that they will reform quite a lot and quite aggressively in the next 2 to 3 years. What you really don't know as yet is whether that translates into action. Clearly it is in their best interests too, but this is also not a time of where we can assume rational thinking. If we do see more civil strife in Greece, if we do see more problems in terms of political struggles in Germany, you can certainly be in a situation where the government, for instance, in Greece does collapse. I mean, I can't forecast if that is going to happen. I can't forecast when it's going to happen, but I can certainly tell you that this is going to be a very, very tricky environment. If, for instance, the new government, if we were to see one, comes in and says that it's not likely to play ball with the EU and IMF and instead wants to follow policies that will boost employment, which means basically expenditure increasing policies, I see absolutely no room, no willingness from the EU to extend any further help. So I think that there are several ways in which this could still get messy. It's difficult to predict when it does happen exactly, but certainly one shouldn't assume that the template that the Fed used or the US Treasury used is going to play out all over again. This time it really is different.
Well, let me take the opinion from the other gentleman as well. Paul Mortimer Lee, what's your sense? Do you think, like Bhanu, you also expect that markets can still go into a tailspin in Europe?
No, I don't think we will go into a tailspin this time. I think really what was happening is we were moving into a situation similar to the one that we saw in 2008. And that was clearly very dangerous. And I think the European authorities realized that. I think President Obama played a very important role in encouraging the Europeans to act quickly and act in massive size. And they've done that. And I think that massive size has substantially reduced the risk that we faced only last week. That being the case, some of the ECB now involved, then I'm cautiously optimistic about the future as we go forward. There are still threats there. There clearly will be adverse news coming in the future. Low growth in some of these countries. The programs may not deliver exactly what they promise. But I think we'll get through that, to be honest.
Well, Paul, the question that people are raising, like Bhanu, is whether all the members will stick with the euro itself. Do you think the euro will survive in its present form with the present number of members? Would you suspect that some of the members may want to quit?
I don't think that will happen. And the reason is, I mean, if you think about one of the countries in trouble leaving the euro, the fact is that, Greece is receiving substantial financial aid from Europe. So say it was Greece were to leave. I don't in any way think they would. They wouldn't receive the aid. They would have to adjust their budget. They wouldn't be able to access the markets. They would have to reduce their budget balance, not over 3 or 5 years, but in 1 year. They'd have a massive dislocation of their economy. GDP would probably fall by 15 to 20%. And I don't think anybody would actually choose to have that happen. And clearly, if one country were to leave the euro, there's a danger of a domino effect. People would price in the probability of that happening to other people. And I think many people, particularly US commentators, don't realize the significance of the euro. It's not just an economic project. It's also part of the whole process we've been going under since the Second World War, 65 years now, to prevent European countries going to war with each other. As Helmut Kohl said recently, this is a matter of war and peace. It's part of the integration process, a very important part. And if it were to start to unravel, then there'd be fears that the whole political process would start to unravel. None of the European countries, in my view, will allow that to happen. And so it may be uncomfortable for them all to be in the same house together. But they've got no choice, really. They've got to make it work. And that's what I think we saw last weekend. The Germans didn't want to guarantee 120 billion of loans through the new special purpose vehicle, but that's exactly what they did. Why did they do that? Because they realized that the costs of not doing so would be massive. And the cost of allowing anybody to leave the euro would be extraordinarily large. And so you might think the bailout costs are large, but the failure costs will be even larger. And that's why I think the thing will stick together. In fact, we're very likely to see Estonia join the European Union within the next year. So it's probably more likely to see expansion than contraction.
Well, that sounds optimistic, at least cautiously optimistic. Bhanu, what's your trajectory of the euro? I mean, how would you trade it, say, for the moment? And how would you trade it in the next quarter, for instance?
Yeah, Lata, as I've said perhaps several times on your television channel over the last 6 months, we do remain negative on the euro. I mean, that at the very least is the outcome of this bailout package, even if it were to be successful. You should imagine that, as we have engaged once again in quantitative easing, that will be negative for the currency. The clear upshot is that the ECB is going to be on hold for a significant length of time and potentially increase their monetary base again using 3-month and 6-month long-term repo operations. So certainly, I would stay negative on euro from a monetary policy perspective, from a risk premium perspective. It's absolutely right that this is a political project. And the problem here is that the arguments most people are using on why this will stay together, as I said earlier, are arguments for compulsion, not of conviction. I'm an EM person, and I've seen this movie several times in emerging markets. We saw it in Ecuador, we saw it in Argentina, we saw it in the 1980s in Mexico, we saw it in Russia. This is not the first time this has happened. The European Union is a political project. Greece really doesn't have the kind of balance sheet that belongs to the kind of core European economies like Germany. Estonia is the antithesis of Greece, which is why it really should become a part of the EMU. As easily as Finland and Sweden can become. Whether they choose to or not is entirely up to them. Whether Sweden chooses to or not is entirely up to them. But I think, for instance, Sweden and Germany are much more, have much more in common in terms of their balance sheet, in terms of their political institutions, legal institutions, in terms of the trust for the government. This is almost a sociological point, but a very, very relevant one right now. When you trust your government, when you don't see them as rent seekers, it's that much easier to push through reform, as is happening in Estonia, Latvia, as is happening in Ireland at this point. When people don't really see their government as totally trustworthy, as arguably is the case in Greece or many other emerging markets, the kind of reform which is being promised, and let's make this very clear, the kind of reform that Greece is promising is staggering, absolutely staggering. You need huge political will and you need huge civil will to do that. I'm just not sure that exists.
Oh, absolutely.